Stephen Meade here with the legendary John Najarian. John and I go way back. I actually met John, I think in '97 in Chicago.
I'm not that old.
Well, neither am I. We look good. We were holding up well. So, but yeah, John's been amazing. He and his brother through the years, CNBC, written books, Market Rebellion, options trading, now into crypto. Amazing stuff going on. That's your intro, John. So give us a little background on yourself before we get started.
Sure. Well, I came at it as a lot of people in the floor trading community do, and Stephen knows this well. Most of those people in the floor trading community have a very diverse background. It's not just everybody came out of the Harvard Business School. Some were former policemen, people that ran McDonald's. There were a number of pro athletes that when I finished a very brief career with the Chicago Bears, I joined several pro athletes on the floor. Both the Board of Trade, CME, the Chicago Merc, and the Chicago Board Option Exchange had a number of pro athletes on the floor, mostly because people thought that if you were disciplined enough to be a pro athlete, you could be disciplined enough to cut losses and take profits.
Yeah.
And it was just a fabulous place to start. And boy, the energy on those trading floors back then, I haven't experienced anything like it since, and I bet you haven't either, Stephen.
Yeah, because like you said, back in the day, I mean, we're going back to the '90s. The market floors were still open, so it's like Trading Places, the movie. It was a completely different time there, and the energy and the badges and people running around. What, John, when the internet started, what did you think was going to be the biggest change for the markets? I mean, what did you see back then that sort of came to fruition? Because there's a lot of things with the new blockchain stuff I believe will be similar. But let's go back to those days. What were some of the things you were excited about or you saw changes on?
Well, when I first started on the floor, Stephen, they couldn't have computers on the floor. They were illegal. So you had to do everything in your head. At best, you could have a calculator, but you could not have a computer on the floor. Obviously,
okay, you're older than I am.
Yeah. As computers got faster and significantly smaller, all of a sudden people were wearing them on their arms. Literally, they would have a computer tethered to their arm, and they'd be trading on that. Well, as you might imagine, the next step is having that same computer and not having the trader.
Yeah.
So that started happening in the late '90s. And by 2000, certainly by the time we sold our company to Citadel in 2004, it was the speed of trading that really drove me off floor, Stephen, because you can't compete with a machine because the machine is going to be at as close to the speed of light as possible. And you're going to get run over. If you post quotes, meaning you put up a bid and an offer on the screen, that computer could hit you multiple times in the same second and bury you. And that was what we were worried about. And I think most of us that left the floor at that time didn't leave it because we wanted to, left it because we had to, because we couldn't compete with the speed. So it wasn't just internet, but certainly internet was part of that, Stephen, that you got quotes faster. They were less expensive to get than they were previously. And the fact that people were harnessing the power of high frequency trading in options as well as stock meant that floor traders' access to the markets was dying very quickly.
Yeah, it was a fascinating time, and I'll reminisce for a minute. Not everybody will get this. I was sitting at Jilly's on Rush Street, probably 99, 2000, HFT, high frequency trading, high velocity trading. And a guy was sitting there, John, with a paper, and it had plus minus, and it was plus 0.02, plus minus. And I looked and I said, "What's that?" He goes, "This is my trades for the day." And I go, "What?" And he was making these little fractions, and he explained it. He said, it's like getting between the wallpaper and the wall. And it was just that little minor fractions, but at the end of the day, he was up 1, 2, 3% compounded over a month. It was amazing. And that was what he said was really going to be the beginning of the end for the traders on the floor.
Yep. Yep. Speed kills. It kills in the NFL. Like they say, there's no way to defend speed.
Can't teach speed.
Nope, you can't teach it. You can't defend it. If that guy gets a step on you, it's over. And the same thing on the trading floor. You can recognize the pattern, but a machine that's been trained to recognize the pattern by somebody that's an expert like you or me, that has put your expertise into that algorithm will outtrade us all day long. And so that's why I had to migrate upstairs, Stephen.
Well, we won't go futuristic. I think it'll be a long time before machines replace, people on the football field. But we'll see.
But it's coming.
It's coming. The whole gaming side. So let's move forward though. I won't call it the dark ages, right? I mean, the internet for us, 99, 2000, 4, 5. When you started moving into 6, 8, 2010, there's a bit of a lull. There wasn't a whole lot of new and exciting things, but during that time you stayed really busy with a couple of books and trading and some programs. Talk to me about that arc of what you did, and then we're going to move up to where you are now.
Sure. Well, so we sold our floor trading operation in 2004, as I said, to Citadel. We began basically using some of the algorithms we developed, just as I described in a moment ago. We put our brains into the algorithm and said, here's what I want to look for, but I can't see it because it's happening too fast. When I started, Stephen, we traded about 400,000 options in a big day. Yeah. When I say we, I mean every exchange in the US. Now we do that in the opening of trade. And we trade 30, 40, 50 million last week, options in a single session. So when you're doing those kind of numbers, the speed that has come from high frequency trading is something that we use now. We use that to get, like your friend with the wallpaper analogy, we use that to access that liquidity pool, because I'm never going to compete with that algorithm, but my algorithm can read that algorithm and see, were they buying on the offer or were they selling on the bid? And if they're buying on the offer, I want to follow them. If they're selling on the bid, there could be a whole bunch of reasons. And there could be on the offer too, but we look for an increase in open interest. We look for paying the offer or through the offer of calls or puts. And then we also are running sentiment scans throughout the day on Reddit, as well as the whole fire hose, every tweet in the world. You can buy that. Folks think if you block somebody, they can't see your tweets. I can see every human being's tweets in the world because we're buying the full fire hose. So when you're doing that, you don't care so much about an individual name here or there, but you do care about that name being mentioned multiple times, especially multiple times in a very short time frame. Yeah. So that helps drive our investments. And ever since we started doing that, Stephen, we built, brokerage firms around it. We've built a subscription business at Market Rebellion around it. And, that is the core of what we do right now. We use the tracking of those high frequency trades that otherwise would be impossible to see, because instead of 400,000, now you're seeing 7 million quotes a second. You can't see that. It's got to be a computer that does it and an algorithm that determines whether you should tag along or not.
Well, I make a lot of jokes when I give speeches, and one of my jokes is, before the internet, there was no internet. and people, there's a delayed laugh, and then I go, but the point is, before the internet, there weren't computers and algorithms and websites. And, even when we move forward to today, you've got Telegram channels and the ability to build communities and have direct access to your community, or sentiment analysis to grab analysis coming back from the community. There's so many tools and things that exist now that didn't exist before. And let's talk about that, because I think it's a good transition point. Before the internet, there was no internet. And there's this whole thing called blockchain, and a lot of people know what it is, hopefully. But my joke, John, is there's no such thing as a blockchain company. I ask people, are you an internet company because you have a website? There used to be Internet World, these big conferences. There's no Internet World Conference anymore. Blockchain, if you're using that as a technology, you might be a game company or a trading company. You're using the technology because blockchain enables processes differently than the internet. And so I know you've moved into that space on an investment standpoint, crypto, things like that. Talk to me a little bit about the journey of sort of how you got exposed to, whether we call blockchain or crypto. I'll let you pick your lane. Blockchain means the tech, crypto's the trading. But pick a lane and give me a little insight on how you moved into it.
Sure. Well, the founder of Fortress really pushed me hard, Peter Brigger, to get into this. And he was, of course, a Goldman Sachs trader, cashed out, moved to Silicon Valley, saw what was going on in Bitcoin and jumped on it. And God bless him, created Fortress, and the rest is history. So that was 2017. And I got, so I wasn't early to the party. I wasn't 2010 or, any of the dates right after Satoshi. And
those are the OBs, not the OGs, the OBs, the old Bitcoiners, not the old gangsters, the OBs.
That's right. So I basically, Hal Finney and Satoshi Nakamoto, whoever he was or they were or are, were interesting, but obviously that interest turned into a huge new wave since about, probably 2015. It was really ramping, 2013, 2015, 2017 again. So I caught one of those waves, got interested. As I've already said, I was already out of the floor trading model. And I saw in crypto something that Michael and I talked about before we came on air. I'm sorry, Stephen and I talked about before we came on air, which was that the speed wasn't there in crypto. You could trade slow, you couldn't trade fast. And that was something that attracted me, Stephen, because I saw an edge, a significant edge in crypto that I could no longer get on the
you
floor.
saw a massive spread between exchanges, and that it had collapsed in the traditional finance world.
Yep. I mean, look at Sam Bankman-Fried. Sam made, a couple $1 billion arbing Korea against the US and elsewhere. And that looked like a huge opportunity to me. I've taken advantage of that. And now crypto is much faster. FTX, Sam Bankman-Fried's brainchild, is one of the fastest areas where you can trade right now. And he does that with Solana, SOL, and HBAR, Hedera Hashgraph. I met with Lehman, the creator of that, that Hashgraph. Great guy. And it's capable of much more than it presently does, but it's done more transactions on the blockchain than anyone. And it's capable of doing 50,000 per second. So when you get into these kinds of speeds, we're getting back towards, what I left. But the good news is that there aren't that many people that are experts in derivatives trading on these exchanges right now. Most of the people, I think, are availing themselves, Stephen, of the leverage that you get from derivatives, but they're using it the wrong way. And for the most part, they're getting hurt. They make some money, sure, but then when they get cleaned out, they get cleaned out. So I look for those pockets, set up with calls or puts, and trade those big moves, for those liquidations from people that have over levered themselves. I never know, of course, whose money it is on the line, but if I'm seeing a whole bunch of small trades going up in the options, you can bet that it's not Pantera and it's not any of the big, Cumberland or any of the big trading firms jump. It is instead a bunch of retail, and I want to be on the other side of that. not
Yeah.
because I don't like them, but because they are more likely to not understand the risk that they're taking on by selling options
Yeah,
or
they'll panic
by,
at the wrong time.
yep, or by over levering themselves. Exactly.
It's interesting, John, because again, I have all these phrases and I talk about what I do, and I know I've known you for so many years now. I call it retrospective evolution. You know, you're able to look backwards and go, oh, what worked with options? What's worked with derivatives? Let's figure out how to use it moving forward.
Mhm.
And you can evaluate that. Most people, I think, get stuck in trying to understand the market as it exists. They'll try and look at Bitcoin as a currency as opposed to trying to figure out what the technology does differently. And so, you know, with your trading background and all of that, I know you've also moved into not only the derivatives trading, you've got a fund now, a hedge fund. You're partnered with some great guys that I know also. You know, what brought you into the fund side? Because that's a little bit of a different structure and animal, but it's a fun one, but it is different.
Yeah. Well, for years, people kept saying you should open a fund, you should open a fund. And, you know, maybe we should have, or maybe we were just doing so well for ourselves that we said, yeah, maybe next year. And next year never came. It finally did this year. We got a couple really good traders, the former head of derivatives at Citigroup, both these two guys that are trading that fund for us are University of Chicago MBAs. They both had significant, like 20-year histories on the trading floors. So they understood the trading floor and they understood digital assets or cryptos. And the fact that they could put those together, most of what I see, Stephen, are people that are really smart young men or women that got Bitcoin or various cryptos early, but they're not great crypto traders as far as derivatives. We've got guys that are both.
Yeah.
So we ended up launching in October of this year. We're a master feeder structure out of the Cayman Islands. So because most of the people that we attract are offshore, it's not because I'm doing some tax dodge. I still have to pay US tax, but
There's nothing wrong with creative structures. That's
right.
what laws are for, is to figure out how to be creative within the frameworks.
Yep. And a lot of the people offshore, of course, don't want their monies exposed to the US regulators. And that's why you trade it through somebody like the Cayman Islands or Bermuda or Isle of Man, Guernsey, Malta, wherever. So what we do is we did 21% net of fees in the first month. And that's with us trading probably 12 different assets. Bitcoin and Ethereum are at the top, and the top 15 assets are probably 80%, 90% of what we do. We do about 10% in what we call ignition assets, and they'd be anything from some of the smaller coins, even Shiba Inu and some of those.
Yeah.
But mostly we're looking for what we can use our sentiment indicators for, as well as our heat seeker. And those top two, of course, Bitcoin and Ethereum, we can trade options or derivatives, futures and options on those.
Yeah,
and
the sophistication's finally catching up. And I explain this to people too, John. To me, it's not any different. With the family offices, their question is, should I invest in Bitcoin? I say it depends. And I built a thing on a different exchange called a crypto concierge. Is your investment profile low risk, medium risk, or high? And low risk to me is like New York Stock Exchange, big companies. That's like Bitcoin and Ethereum. Medium risk is like NASDAQ, Microsoft, Dell, and some company. That's Chainlink and EOS. And the OTC, that sub-dollar penny stock, are all the crypto tokens. Like it's retrospective evolution. You can pick a blend, everything from the Bitcoin and Ethereums to a bunch of meme coins that have no fundamentals, but will go up because a guy famously puts out a tweet.
Yep.
So,
and when you've got, we're closing in on 14,000 assets now that call themselves cryptocurrencies, 13,800, I think, or thereabouts right now. It goes up every single day. And a lot of those, just as Stephen described, are he didn't say garbage, but I'll say garbage. They don't really have a use case. They're sort of manufacturing a use case, but they're not really necessary that they have a coin in most cases.
Correct.
But, you know, it's a great way to raise money.
I tell people most cryptocurrencies are glorified penny stocks.
Yeah.
Over the counter. You've got OTC gray, which is really risky. Pinks, which might be a little better, but are unaudited and you don't know much. And then you can move up and, you know, you can execute a crypto just like an over the counter. Have a good product, run press and PR, promote against the press, hire a personality and move to profit.
Yeah.
You know, like the execution's the same. I actually think eventually all startups will be tokenized, not because I think it's great. Investing in equity, John, I think puts people to disadvantage. Meaning if I put money in as a startup and I have a 92% chance of losing that equity because most startups fail. If that equity some point converts to a token and is traded, that's no different than a little penny stock. There's optionality. So I think the markets will mature on the low end. Let's stay up where you are. At the hedge fund side, what's the strategy for the fund? What's the blend? What's the projected return between the big core assets and the ignition assets?
Like I say, about 80–90% of the trade is in those core assets. And on a daily basis, it's probably 40 or 50% in the top four. And that's top four by volume and market cap nearly always, except for, of course, Tether, because nobody needs to trade Tether.
Yeah, you don't trade.
But what we do is we trade a lot of call spreads. We trade a lot of iron butterflies and condors. These are strategies, multi-legged strategies for calls or puts that we can put on for almost nothing, have exposure to the coins. And like right now, I think Solana is probably our biggest position. It's bigger than Bitcoin right now.
Yeah, the appreciation's been amazing on it.
It has. And, you know, coins like Binance, I love that one. I love FTX. But we're really trading these. It's not like we're saying, oh, we'll give you a tracking stock for Bitcoin. We're not that at all. We're looking to enhance
low risk
yield.
New York Stock Exchange kind of stuff. So again, being bullseye specific, let's drill down a minute on the word trading. Are you doing classic day trading where you're in and out a couple times and close all your positions at the end of the day? Or are you sentiment trading, you know, based on sentiment where you might hold a little bit longer, but that trade's happening more frequently?
Probably, again, 40–50% is what you first said, and that is day trading. The other 50% is longer term holding. But longer term in crypto might be 3 days, it might be 2 weeks. Yeah. And we're putting on those trades, you know, believing that based on the data we're following, that the likelihood of this particular coin going up or going down is pretty good. And for that reason, we establish a trade for days and or weeks, especially since we can carry a core of spreads in the top two assets. So that's what we do mainly. We carry probably, you know, close to 50% of the value of the fund in longer term trades. And the other 50% are everything from those ignition assets, again, a very small 10%, to the bigger ones where we're day trading those, just as you said.
Yeah, and that's just asset allocation. You know, you might have 10% in the high risk portfolio, and it's, again, retrospective, it's no different. But I think you've got such a great opportunity because there's that legacy kind of financial mindset that doesn't understand. They confuse crypto and think it's more complicated than it is. And if you can move them over, there's, you know, the stock to flow, the bond to flow, the cash that can move over out of corporate and family offices and hedge funds. Your strategy is just using the new technology in a, you know, it's the old trading with new tech.
Yep. And I'm sure you would not be surprised, Stephen, to hear that virtually every old floor trader that I talk to, even if they're not as old as me, Maybe they only had the last couple good years of the glory years of floor trading. They're all trading crypto, every single one of them, because again, it's the Wild West. It's the best opportunity out there. I know why people buy it, for an inflation hedge, for something that they worry about the balance sheet of the Fed and so forth. I understand that, but there's an awful lot of trading that's going on from people that just, love the action.
Yeah.
And there's no better action right now than crypto.
And again, this is where I have to do so much education like you do. Money exists in different forms. Money might be fiat paper. Money, a debit card is digital. A bar of gold acts as payment. A stock, that you use money as a fungible thing to do different activities. And blockchain's enabling, crypto to do different things. You might hold it, you might sell it, you might trade it, you might use it like a debit card or a gift card. It's not any more complicated than that, which I think is exciting. Let's do a little forecasting, John. I'm not going to say, oh, what should you invest in? Like, I would never do that. Let's look at where do you think the industry is going to go in the next, I'm not even going to go 5 years, two years out, because some of the new platforms that are coming out are faster. Transactions are getting faster, utility and function. What are you excited about for the next two years?
Well, I'd say within the next 2 years, cryptos will easily surpass gold on the trillions of dollars that are held in those. So not Bitcoin itself, but for instance, the crypto market cap as it stands right now is $2.9 trillion. We touched, I think, 3 trillion this week. We started the year under 1 trillion. So I think we go well over the 10 or 11 trillion that is in gold within the 2 years.
I think they're different though. I think Bitcoin to me gold is like Bitcoin. And I think Bitcoin eventually will get to 10 trillion if it's the asset. Crypto to me is the combination of OTC, NASDAQ, and NYSE. So if you look at the whole volume of the stock market, I think crypto is going to eventually go that big or bigger, not because I'm all Pollyanna maximalist. I just think that's where the money's going to move to.
I am bullish, but you are uber bullish to think that. And I can't say you're wrong because, however many years from now, you could be right. But right now, I'd say Bitcoin will likely within 2 years be 200,000. Ethereum will pass it in market cap. I believe the flippening will happen within these next 2 years because that takes us out to 2023. But then that halving that'll occur again in 2024, Bitcoin will then leave Ethereum in the dust at that point, I think, because assets gather their value by their scarcity, and it'll be more scarce. There'll be fewer virgin coins being mined. Half as many, of course, just happened last May, and that's continuing to help drive, along with the new adopters and adoption of crypto. It is, of course, that there's fewer virgin coins every day than there were last year going into May.
Yeah, and the reason I say crypto to me will be bigger than the stock market, because to me there's a convergence. I think all stock will eventually be digital. Well, there won't be the fact that I have to buy an Apple stock at $1,500 and can't buy it in 16 increments. So that's why I say bigger. I think eventually stocks won't be issued as traditional stock digital instruments now. They're going to be a blockchain type of stock where you'll be able to trade in fractions. So that's what I meant. I don't think it's going to be all new offerings. I think the stock as we know it's going to be in a digital form, which gives you more transparency. Like, that in the over-the-counter, dilution and hidden shares, there's so much that are complications in the stock market because of the legacy structure. I think blockchain is going to enable it to go digital. That's why I think it'll be bigger. I don't think it's going to be all new offerings. I just think it'll be the tech.
Gotcha. Well, and time will tell. I bet a lot of people watching are in your camp.
Yeah, well, I hope so. There's a lot of great things that blockchain does, and it'll fix, some of the old problems. That doesn't matter. So right now, the hedge fund, the derivatives, the trading. How do people get a hold of you? How do I send them to you? How do they jump in and get involved with the legend, John Najarian?
Our website, of course, is marketrebellion.com. If you go to Rebellion Crypto, if you Googled Rebellion Crypto, hopefully you will see Rebellion Crypto links. The fund is $250,000 minimum. And that's because, of course, they had to be qualified investors to invest in it, like most hedge funds. But yeah, Rebellion Crypto Partners, if they Google that, they will find us. Thank you.
All right, and I'm going to go forward as we wrap up. You've done stuff before around, education and training and some things like that. Are you going to move any of that sort of legacy activity into the new world of blockchain and crypto and trading and do some of that training as well?
Yeah, we have fairly significant. In fact, we're hoping to finalize a deal with somebody who is one of the founding members of Hedera. His name is Jordan Freed. Brilliant young guy, 32 years old, has started Immutable Holdings, which is a publicly traded company out of Canada. He owns a number of assets in that company, including NFT.com and 1-800-BITCOIN.
Nice.
And he puts a lot of his crypto assets into that Immutable Holdings. It'll uplist soon. And I think with him, we offer education from the very beginning to intermediate and advanced strategies for trading crypto. We have a chat room for crypto. If they go to marketrebellion.com/try crypto, they'll see it. And we've got thousands of folks in that room. They get basically weekly webinars, as well as the combined expertise of that room. When they're talking about a given protocol or a token, they can basically bounce questions back and forth with everybody. So we don't just teach them, we then let them get into a community where they can basically ask questions throughout the day, 24/7. There's somebody in the room. And of course, since we're US based, most of it is in the US time zone, but it goes all night long. Yeah,
time zone in English. All right, John. Amazing as always. The time I always appreciate, because I know you're super busy back there. So stay safe and stay busy. Stephen Meade, the Bullseye Guy. Great stuff. Tune in next week.